Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 23rd, 2024, and we're diving into Herc Holdings' latest earnings report. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Herc Holdings has just released their third quarter 2024 results, and there's a lot to unpack, from record revenues to strategic expansions.
Revenue and profitability overview. Let's start with the top line. Herc Holdings reported a total revenue of $965 million for the third quarter, marking a 6% increase from the previous year. John, what are the key drivers behind this growth?
Absolutely. The primary driver was the equipment rental revenue, which hit a record $866 million, up 13% year over year. This was fueled by a 2.3% increase in rental pricing and a significant 10.7% rise in volume. Despite a challenging interest rate environment, Herc managed to capitalize on mega projects and an expanded branch network.
And how about profitability?
Net income rose by 8% to $122 million, translating to an earnings per share of $4.28. The adjusted EBITDA also saw a 9% increase, reaching $446 million, with a margin expansion to 46.2%. This indicates strong operational efficiency and cost management.
Operational efficiencies and strategic initiatives. John, let's delve into Herc's operational efficiencies. How did they manage their expenses this quarter?
Direct operating expenses were $334 million, which is 38.6% of the equipment rental revenue. This increase is primarily due to personnel and facilities costs from new greenfield openings and acquisitions. However, Herc has been focusing on improving operating leverage, which is evident from the SG&A expenses being 14.2% of rental revenue, down from 15% last year.
What about their financial strategy, particularly concerning debt?
Interest expenses increased to $69 million due to higher borrowings for acquisitions and fleet investments. Net debt stands at $4.0 billion, with a leverage ratio of 2.7x. Despite this, Herc maintains a strong liquidity position with $1.9 billion available, indicating disciplined capital management.
Future outlook and leadership insights. Looking ahead, Herc Holdings has updated its guidance for the full year 2024. What can investors expect?
The company has raised its equipment rental revenue growth guidance to a range of 9.5% to 11%, reflecting confidence in capturing market share from increased construction spending. The adjusted EBITDA guidance remains at $1.55 billion to $1.60 billion, excluding the Synalease business, which is currently up for sale.
And what insights did the leadership provide?
Larry Silber, the CEO, emphasized their strategy of expanding in resilient urban markets and leveraging their diversified product offerings. This approach has allowed them to outperform industry growth and maintain robust volume and pricing performance.
Key takeaways. In summary, Herc Holdings has delivered a strong quarter with record rental revenues and solid profitability. Their strategic focus on urban markets and disciplined capital management positions them well for future growth. John, any final thoughts?
Herc's ability to navigate a challenging environment and still post impressive numbers is commendable. Their strategic initiatives and strong liquidity provide a solid foundation for continued success.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Herc Holdings' performance in the comments below.